Good day, people. My name is Wilco van Bokstel from TradeReact.com, here with the weekly market review of 21 till 25 March 2016. Welcome if you're the first time here, and I will introduce myself and discuss some forex pairs, gold, oil and S&P 500 for the coming week. First, I show you this trading disclaimer. Give you some time to read it, of course. We all know this information. Well, if you know forex and trading, it's a high level of risk and you always need to do your own analysis, manage your own trades, manage your risk and your size, etc. So now let's go to the screen. Hey, welcome, it's me. And show you here my profile on Dukascopy Community, where you can add me. I'm New Energy. As you can see here, you can check out my stats and everything, contact me. I also give webinars. If you want to stay updated on that, join TradeReact.com on Facebook. I will show that here. TradeReact, TradeReact.com on Facebook for trading and more news updates. You can also contact me professionally on LinkedIn, Wilco van Bokstel. I am also on Twitter, New Energy. As you can see here, NUONRG. Wilco van Bokstel for private and trading updates, webinar announcements, etc. Now let's take a quick look at the calendar for the coming week. 21 till 27, well 25 March, that's Friday. As you can see here, we have some dollar news, mixed news. The red ones, RBA is going to speak, so let's do the Aussie pair in the review. We have the Euro, climate, business climate. On Tuesday is a busy day, as you can see. The pound and more Euro news. Wednesday, crude oil inventories, trade balance of the Kiwi. And Thursday, mixed news, also the pound, the euro and the US dollar unemployment claims. Then Friday, the final GDP of the US dollar. So we might return to this chart, but let's start here with the news and pick a pair that is in line with that. If you got any questions, put them below the video, or if you want to see another pair highlighted or more details, I will just keep the video kind of short. And you can join my webinars this week to look at the Dukascopy schedule or TradeReact.com Facebook page for when I have my webinars. Probably on Thursday this week, and the rest I have to fit in my schedule. I will see what I can do. So yeah, let's look at the Aussie. The Aussie US dollar. Here we're having the daily chart. This price has broken above here, the 200 MA, and is now in a move up. Getting into the recent price action here, around the R3078. Let's draw in some fibs to see where this price might go. Possible retracement zone. We have that here around the 38, that's 0.74, and we can have possible extensions into the R3 of the weekly, or possibly even 0.79 and the 0.80 or just above it. Let's look at it from an extension perspective. If we take a recent high to high, it lines up better for a target overlapping the R3, also coming in line here. Let's check with the highs of June 2015. So that's something to keep an eye on. So this is in the up move, and look at a move higher on Aussie dollar. Next, let's check the calendar, and let's look at the Euro US dollar for the Euro news on Tuesday. Okay, here we have it, the daily. Price is a bit in a range, moving up and down. I switched to the weekly, so you see what this has been doing, of course dropping off in 2014, and now we're here stuck in this range below, where price shows new strength because of the dollar weakness last week on the Fed news. So where can we go? We had some lines here from the high here, 100, almost 200 pips from the price where it's now, and that's into the R2 of the weekly resistance. You see on the weekly here, the stochastic is sloping a bit down, so keep an eye on that. RSI is pretty high, so we might start with some pullback and keep that R2 open as a good target to the upside. Let's look at some Fibonacci. We had some move here to start off with. Of the first move higher, as you can see, we reached into the first and the second target, and then price retraced, and now it is retesting those highs. So we can look at the overall move and see in this case the 618 has been good support, as we see on this last spike down, and price buyer stepped in and pushed price higher. So that's still a valid target to the upside, because we might exhaust at the moment. You see here on the daily the stochastic is pretty high, but it looks for more upside. Let's check this last up move. Then we see we can keep an eye on the 38 level, 111,642 for possible support higher, for price to move higher from here. If we fill that 38 level, we might see some ranging price actions all the way back into the lower area here between the 618 and the base of price of this range. But first let's look at the 38, how it reacts around this area, if it finds support for a move higher. Where I can move price higher into the recent highs here of September 2015. It's around 114.50. So it's now 200 pips from there. If price retraces to the 38, you have a run of 300 pips. If price moves above it, we have some extension levels around 115.9, just below 116, and extended up into 117.2. So that are views, upside moves for the moment, with a base structure around the 38. Looking for buying opportunities this week. Let's see if we get it. We might get some pullback first. All right, continue on. We got the pound in the news. So let's select the pound pair, where we have the CPI and the retail sales later the week. Let's go there. Pound US dollar. We've seen a big move higher last week, also because of the dollar weakness and the Fed news. That helped this pair, obviously, as it was in a downswing. You see here, it found support at the lows here and pushed price higher. So now let's draw in some fibs to see where it is at. This was the downswing, and as you can see, it crushed to 618 to the downside, meaning we're now going to look at a higher price and possible pullbacks for support. We have this first move with bullish candles, and it found support around the 38.2, as you can see here, lining up exactly with the support line I've just drawn in. So that's a good base of support, and we've got extended levels here around the 38 has been hit. It's 144.50, and the second level is up 145.55, coming in line more or less with the levels here. We have extension levels higher upon where price might go because of these big candles. We can draw in, if we see a push up into the target and we measure this move, then a retracement can happen from this 145, sorry, from 145, I need to look closely, 145.60. Depending if we just break it, we can get into the R3 or the two targets I have highlighted here. It's 147.50 and 148.75, nearing the 200 MA on the daily, on the pound US dollar. If we see a pullback from this 145.60, we might pull back towards the 38. It's 143.70, just below the 144. If that fails lower, we might see even a 50 retest or a spike upon 618. So I prefer to stay to look for longs around the 38.2 for support for trades higher. So keep mostly an eye on the 38 and on this, so the 145.50, 60, and on the 143.70, and that's the 38.2 level for a move higher in the pound US dollar. Next on, we have some Kiwi news. So let's review the Kiwi pair. Let's erase this. We've seen price also move higher because of the dollar weakness. It broke above the 200 MA on the daily. Let's check the weekly real quick. You see it's still stuck in the range, but preferring the bullish stance a bit because of the last weeks we've seen indecision, one bullish candle, some rejection, and another bullish candle. So it looks like it's breaking out of this bearish range and wants to go higher. So let's look for some opportunities where we can look for long opportunity. Switch back to the daily. Draw on some fib. If you look at this first spike higher on this daily chart, we can see price found support around the 618 multiple times. 50 and the 618 was a good buy, and it's now running into his first target around the 06880. Am I saying it right? 06860, sorry. And the other target above is 06930, coming in line with the R2 of the weekly. So I'm watching that target to the upside from now on. Let's put in a line there. Possibly higher, but if we look at some retracement, let's put in the fib again. From this last move, we might look here at the 38.2, that's the 06760 level, coming in line with the 200 MA on the daily for a move higher. If it still might range here, that it can do, I'm looking at my dynamic support on the MA lines. That comes in line with the 618 and the 50 support. So depending how the week start a bit, it'll start in retracement, then I look at the 38 to the 618 for support higher on the lower time frame. If it runs up, I look for the 06930 as resistance for a possible pullback then, and then a move higher into the two targets highlighted here, 06990, so just below the 070, and above 07050 for the coming week on the Kiwi dollar. Hope that helps. Let's review one more pair for the unemployment claims, the dollar against the CAD. This price has been moving down, lower. On the weekly, price moving lower, getting a bit oversold, but the strength is to the downside. Finding some horizontal support there. Let's check out the daily. Let's see if it moves in some extensions. We've seen a lot of price action. We've seen this down move that has been hit already, and price just broke through. We have some price action here that has also been met. So it's very strong trending down move. Looking at this down move from February, beginning of March, price has rejected the 618 multiple times and moved down into the first and the second target around that horizontal support. So we might see some pullback, some retracement towards the orange line, and between the orange and purple line, to look for selling opportunities again on the dollar CAD, and that is around 133.30 or just below, and that's the 38.2 retracement from the last monthly move. So price might pull back now, can look for possible support. If you are a counter trend trader, it's more risky, of course. Look for price to move into that level for new selling opportunities. Again, into the double bottom here, around 129 or possibly lower. And then we can draw in this move for possible levels into the 127.30 or the 126 on the dollar CAD. Let's see, one bonus review, dollar yen. Show you the weekly. It's moving into this 200 MA on the weekly. That's a possible target. And if we check that range, you see it here has been ranging a bit. And finally it showed a rejection candle, so the bull stepped out, it seemed. And now we are in the sell zone again with those two support lines here. Let's take our Fibonacci retracement. Let's get this down move. Show you the Fibs. Price has been ranging, so none of the levels have been respected. But I'm looking for a move lower. Retracement can go up again towards here, the 38.2. That's 112.50. If that violates, we possibly see a price range again back up, but as it shows more bearish power at this moment, I prefer to look at the 112.50 for a move to the downside, also coming in line with the daily, the orange line, or between the orange and the purple line, the dynamic MA trend. Now we have levels down into the 109.67 and the 108.80 and the 108 for possible targets to the downside on the dollar yen. So those were the highlights of this week. If you want more updates about this, join my webinars. Look at TradeReact.com. As you can see here on Facebook for webinar announcements and trading news. Else, I want to thank you all for watching this review. Please leave a like and subscribe to my channel TradeReact on YouTube and on social media. Welcome to connect. Let me know if you watched the video and you liked it. If you got any questions or want to see other things, I can do that also. I didn't have time at this moment for oil and gold, but I might do a next update tomorrow. So let me know if you will appreciate that. For now, I will show you the thank you page and see you all next week, and have a wonderful trading week with good results. Always manage your risk and your size smartly, cleverly, and I see you next time. Thank you for watching. Goodbye.